Hello traders, Cousin Vinny coming to you from theclosingprint.com, March the 8th, 2020. In this edition of your weekend video newsletter, we'll discuss the indices, all of which moved lower again last week. As we can see, with most of the FANG and tech stocks that we follow moving lower, the bond stock ratio is still bearish. It could reverse in the short term. The Dow Composite is bearish. The S&P 1500 is on a sell signal, and you get the point. We're looking for a bounce in the short term while we continue to hold our hedges open to the idea that we could see lower prices in the short term as well over the next few weeks. All of our indicators are at extremes, ready to return in the opposite direction back to mean, while NIMO and NAMO, breadth in general, have yet to improve. We do see a possibility for a bounce over the next week or so. Put-call ratio is at 1.18. That's not at extremes per se. With the US dollar bearish continuing to drop, that's having a positive effect on commodities like gold, while crude has been moving lower due to the Saudi Arabia issues that entered the market last week, with crude off almost 40% in the last 8 to 9 weeks. The heat map is improving for both the S&P 500 sectors and the international markets. We do anticipate looking at some of these IBD 50 stocks this week that are showing relative strength, in addition to the MarketSmith Growth 250 and stocks in the top 20 volume percent gainers that showed up last week as well. Volkowski's showing 505 green with his CPI signal red since March the 19th. It's at 6%. That is bearish and should start to improve in the short term, with 79 bearish patterns, 5 bullish patterns, and 246 patterns waiting for a breakout. Bottom line again this week, we are cautiously bullish, extremely oversold. Doesn't mean we can't get more oversold, so we'll watch and wait for confirmation of a bounce. We need to see buying on above average volume. The S&P 500 equal weight index disregards the weighting that the S&P 500 alone has, where the big cap tech stocks comprise the top 10 for the most part, with a few names like Johnson & Johnson, JP Morgan, Visa rounding out the list, whereas some of the stocks on the bottom of the list have shown some relative strength yet have lower weightings. So looking at the S&P 500 equal weight index helps us identify this low that we retested last week that everyone is watching for. In addition, we're seeing some bullish divergence with the number of stocks moving above their 50-period moving average, making a higher low at the present time. We're looking for a trigger as well. So keep an eye on this particular index. I know many of you have this particular chart in your tool set, so just make a note of it. And despite the weakness that we saw last week, we do see the growth stocks outperforming value. IGX via IVX continues to rise, with the value stocks taking a bigger hit than the growth stocks, which is a little counterintuitive when you think about it. That said, we could be a little bit overbought on the growth side, so we'll keep an eye on that this week as well, looking for any kind of signs that we might see some weakness short term with a rotation back into value and some of the stocks in the bottom of this particular S&P 500 weighting list. Also, look at the opening monologue. You can see that the Dow Industrials, 30 well-known names that show some potential, like Home Depot, McDonald's, 3M, Walgreens Boots Alliance, Procter & Gamble, Walmart, Verizon, United Health, and Merck, to name a few. So there are stocks that look bullish coming off of recent lows that you might want to consider this week into the seasonally strongest months of the year. Also keep an eye on stocks like Apple, which are making a dramatically higher low compared to, say, Facebook, which is making a lower low, Amazon made a higher low. Netflix is holding right along this 360 level. Google printing a lower low, and Nvidia with a higher low. So with these stocks making a higher low, we'll keep an eye on those. That should help the markets, especially the tech sector and the NASDAQ 100. Bouncing off of the 200 period moving average 2 weeks ago into last week, Friday, making a higher low, closing in the upper half of its daily range on above average volume. If we consider breadth for a moment, the S&P 500, mid caps, small caps, and the NASDAQ in the lower panel, we're closer to the minus 30 zone, looking for a bounce, so watch for a breadth to improve this week. If we don't, we could see a retest of the lows, while VIX and other extreme indicators suggesting that we could see a bounce first. With VIX monthly, we see that every time we moved above 50 in the last 20 years, we did make a lower low in the 6 months that followed in each case. So there is a possibility for a bounce into the seasonally strongest months of the year and then a lower low at some point if VIX history is any indication. So we'll keep an eye out for that. Just remember to keep some hedges at your disposal. I like SQQQ for the growth stocks. It seems to move the most. And at highs, we'll sell some covered calls and then buying them back at the end of the day. Each time bringing our cost basis down below 19 over the last couple of weeks and collecting premium in the process. With the recent news from Saudi Arabia basically signaling a change in their output strategy, the resulting move in crude has been to the downside. As such, a lot of the stocks on the small cap Russell 2000 took a hit last week, as the index is fairly heavily weighted in small cap biotech and small cap oil and gas names. That said, we are looking for a bounce in the short term for the IWM. The bond stock ratio, for the most part, appears to be ready to turn. This particular chart from Macro Charts that David shared with me this weekend is a pretty good reflection of where extremes in the past 3 global crises hit and turned. We're starting to turn up now. Potential for a follow-through and a breakout. An interesting takeaway on this particular bond stock ratio, and something to keep in mind this week. As all of the bond durations, this is a 7-10 year IEF, are at extremes. AGG, the Barclays Aggregate Bond Fund, we have a position here. This is what bond traders use as their benchmark. Continuing to rip higher on extreme volume. This trade is overbought and oversubscribed to, so it's ripe for a potential pullback. With TLT, the 20 year, also at extreme, showing potential selling at the highs last week on above average volume, overbought. This appears ready to pull back in a little bit. If this was any stock that you owned, more than likely you'd be taking some profits up here. While the 10-year yield is at lows we have never seen. Similar crises back, the European debt crisis, Greece was about to default, Asia commodity crisis, while the coronavirus, you can debate being a more significant crisis, instilling fear around the globe. We are at levels that can't sustain themselves in the short term, so we are looking for a bounce as the S&P 500 in the lower panel moves back into the 2018-2019 consolidation area. We're looking for buyers to step up in the short term as we look for confirmation that institutions are picking up equities this week. That confirmation coming on a significant number of stocks moving higher. We have to see that first. And we want to see block volume with prices above same during the week. In addition, we saw safe haven currencies like the US dollar dropping off over the last 2 weeks, having a positive effect on gold, which continues along its bullish trend, trading at highs. We do have a position in GDX and gold in our retirement account. So if this continues to move higher, it looks like that's where money is being placed rather than the US dollar. While that's happening, we do see commodities like copper, a forward-looking indicator, drifting a bit lower but bullish last week. We'd like to see this moving higher like it did back in 2009, a precursor to the current secular bull market, and also back in 2016, where it moved sideways up into the election and then started moving higher, forecasting better things to come. So we need to see copper moving higher in the short term if we want to remain bullish in the construction, home builder, and building products groups in particular. Finally, if you've been listening to the news, you know there's some issues with OPEC and Saudi Arabia, with crude oil responding over the last few weeks, down almost 40% from the recent highs, and down 7.7% last week alone. If we lose this area, looks like we could be headed back down to the 2016 lows at $26 per barrel. There's a few analysts already projecting that level, so we'll join the bandwagon. If crude oil does move lower, that would be a headwind for U.S. equities. It has a positive correlation to the S&P 500 and U.S. domestic equity market. So we really need to see this stabilize in the short term. We also have a lot of small cap oil and gas names, which I already mentioned, that are related to this particular sell-off, many of them trading near 52-week lows, and are in junk bond status. So that will also affect junk bonds. So if you have any exposure to any of those three, you might want to keep an eye on them and hedge your position. The sector heat map has improved somewhat over the last couple of weeks. We had, with relative strength in real estate, technology, consumer staples, utilities, and healthcare, while the worst hit are energy, transports, and financials, which are super weak. In the international markets, things are looking a bit better, with Taiwan, Korea, the emerging markets, and Turkey faring the best over the last couple of weeks. Here are the IBD 50 stocks for the week. These are 5-minute charts. We're looking for the stocks that showed relative strength at the end of the day, which saw buying to continue higher, like AMN, ARE, BAH, and so on. Many of these moved higher towards the close, seeing some buying like CHGG, Floor and Decor, IIPR in the cannabis industry, KLA 10 Core, CLAC, Netflix moved a bit higher as well. Many of these stocks looked pretty strong last week after 3 o'clock or so, rallying off the lows. PFSI, this is one that we've been watching for a while. In addition to Repligen, Regeneron, all of these moving higher. Ring Central, again, all of these are 5-minute charts. Okay, so many of these look good for the week ahead. Zito, you can see making higher highs. We look for a little pullback in some of these names before getting into them. I really like some of these new names that are on the list this week, with AMN Healthcare Services trending along the 9 and 21-day moving averages. This is a bullish trend. Look for any pullback as a buy point. We don't want to buy the high. That's our core strategy. Look for the bullish trend. If the stock is trading above the 21-day, that is a check. If RSI is above 50 and rising, that's another check in your favor, an edge in your favor. And if MACD is above its signal line and rising on above average volume, that's also another thing to watch for. We're about to cross back up through. You can see histogram is about to cross through 0. ARE, while a little bit different, it is below the 21-day, but it's at an area of key level support at the 200 EMA, finding buyers. You can see the wick on the candle. That means buyers stepped up at the end of the day. Pushing this higher is a possibility. We have yet to see it move above 50 with regard to RSI, so that needs to happen, and MACD needs to continue to turn. So this is something to watch. If it continues to move higher, all of these oscillators will move with price. Audio codes new on the IBD 50, watching this level at the 200 period moving average for the same reasons. BFYT, Benefit Technologies, RSI is above 50, price above the 21 day. 21 day is bullish. MACD is turning, volume increasing. Keep an eye on this one for a breakout, relatively inexpensive name. BFYT is administrator of affordable individual health care insurance discount benefit plans that are sold throughout the United States. Do note annual sales and earnings continue to climb. Relatively new name. Nice metrics on IBD as well. Booz Allen Hamilton, this one's been on our watch list for several weeks. We're watching a move to the upside at this point. Having found support at the 200 period moving average 2 weeks ago, this followed through last week. RSI is above 50 now. MACD is above its signal line. Volume is increasing. Look for Booz Allen to continue higher this week. Brown & Brown in the insurance business, we see a higher low. RSI is trying to get back above 50. A move back above the 21 day is something we'd be looking forward to over the next couple of weeks. Care Trust REIT, this one's been on the IBD 50 probably for the last 6 months. On and off. This one continues to move higher. It's at the 200 period. We found buyers on Friday. You can see that long wick. A move above 22, 23 would be significant. We'd be looking for a test of the recent highs at 24.30 or so. RSI should turn back up as a function of price. MACD momentum is starting to move in a bullish direction over the last 4 trading days. Friday was a little bit above average volume. We didn't manage to close green, so the volume bar was red. Look for a follow through this week, maybe a move above 23. Chegg, purveyor of electronic and printed textbooks for colleges and lower grades, looking for a bounce off the 200 period moving average and a follow through higher low. RSI will be back above 50 if it does. Looking to nibble on stocks like this if you're interested in building a diversified portfolio. This is one I'd be watching as well. DXCM, we looked at this one in the last couple of weeks, looking for a follow through. Wick at the bottom of the range on Friday, closing up in the upper half of its daily range, looking for a follow through this week. MACD, volume, and RSI should follow through as well. We've been watching Dropbox for the last couple of weeks. It had earnings, pull back, and then we had the coronavirus and all that stuff hitting the news, having an effect on most stocks. Looking for a bounce back above the 200-day moving average. You can see the 200-day is starting to flatten out after descending for the past 7 months, 8 months. Facebook, more oversold than the other FANG stocks, holding at the October lows here, just above that level. Oversold conditions on RSI. Looking for Facebook to find some buyers. Otherwise, we'll pass for now. Floor and Decor, remember the copper chart we showed you from the commodities. If that continues to move higher, expect to see some of these building supply, construction related names moving higher as well. Looking for Floor and Decor to get back above the 21 day for starters. RSI to stay above 50 and MACD to turn. Volume will start to pick up to show and confirm that institutions are actually picking up shares. No volume or MACD continues to move lower, we'll pass on this one. Many of the cannabis stocks saw some strength last week, some upgrades, some bullish price action. Looking for IIPR, which buys and leases warehouse properties for indoor growing of cannabis, medical cannabis, and related industry group names. We're looking for this to follow through, get back above the 21 day for starters. So look for a move back above the 21 day. KLA 10 core chips, holding above the 200 day, got rejected at the 21 day last week on Wednesday. Looking for a bounce, RSI to get back above 50, and for chip stocks to move higher. Saw some interesting news on AMD this weekend related to their product line at a conference or analyst meeting they had. So keep an eye on AMD as well. Intel and other chip stocks. Technology actually held up fairly well last week on a relative basis. Lumentum, LITE, holding at the 21-day. Buyer stepped up at the end of the day, closing in the upper half of his daily range. Would have preferred a bullish candle. Keep an eye on this one. This might get going this week. Netflix, you see these wicks along this level at 360. Buyers keep stepping up around that level. A pullback to breakout zone at 359, 360 being defended. So we'll see how this plays out this week. Nvidia showing us a higher low, needs to get back above the 21-day for starters, and RSI needs to turn back up to keep us interested. PennyMac Financial, this one's been on our watch list from time to time over the last few months. Was in this big flat base much of the end of the year, 2019. Finally started to get some volatility in it, started to move. Now we're looking for this breakout to continue. Volume has been picking up, showing you the institutions are picking up shares between this 34 and 38 level pretty heavily. So if this starts to move on Monday, this might be a stock to add to your watch list as well. RealPage showing relative strength, remaining above its bullish 21-day moving average. RSI is above 50, with the company providing on-demand software for managing, screening, and leasing and accounting in the rental housing industry. While a lot of millennials are graduating college, getting married, having families, starting their careers, maybe starting out with a nice apartment, helping this company with annual sales and earnings that continue to grow. Good IBD metrics as well. Regeneron Pharmaceutical, we also saw Johnson & Johnson, Merck, and many other pharmaceutical names moving higher last week. This is a very bullish trend in Regeneron. A number of you have traded this one over the last few weeks. After breaking out of this consolidation pattern around $400, this flag followed through, and now we're trading almost 100 points higher over the last couple of weeks. Repay Holdings, RPAY, this one's holding at the 21-day. Interesting. I'm watching how this plays out this week. As the name implies, it provides electronic transaction processing services for merchants. Look for this to follow through. With the others in the group, Visa, MasterCard, PayPal, etc. Repligen, RGEN, this one followed through off of the 200 period moving average. Looking for prices to move above the 21-day, the 9 to cross back up through the 21-day in a bullish direction. RSI will be above 50 next week. If this continues, MACD will most likely cross. Looking for a nice entry on Repligen. SolarEdge, one of the stronger names in the solar and alternative energy group, looks pretty strong above the 21-day, closed above the 9 EMA in the upper half of its daily range for 3 days straight. Wednesday, Thursday, Friday closed in the upper half of its daily range. RSI is above 50. Look for that to turn back up and MACD to stay above its signal line. I'd like to see volume increase if you're thinking about buying this one or adding to it in the short term. TradeWeb Markets bouncing at the 21-day moving average. Buyers stepping up as the company builds and operates electronic over-the-counter marketplaces in the United States as well as internationally. Big cup handle pattern broke out. Then the virus news hit. Started consolidating in this pattern. A range, it looks like. Look for it to move back above 50 in the short term. We're also watching Yandex is holding right at the 200 period moving average. Look for a bounce back above the 9 and 21-day if institutions return and start showing some interest. While Zito, we discussed over the last few weeks, continues its thrust higher. We did sell into strength Thursday and Friday. Hopefully we'll get a little pullback now if you did exit. If you're still in it, well, I hope that it moves higher for you. If it does, look for 27.33 upper ATR 3 bands as your target. RSI should be overbought at that point. At some level, I'd like to see a little flag for an entry. I don't want to buy it up here now. Look for a little pullback, and then maybe we can get a re-entry for those of you who sold it on Thursday or Friday. We have some additional names on the opening monologue. Just check those out. The Market Swift Growth 250 showing relative strength, as well as the stocks in green, above average volume. If those continue to move higher on the list, that might be additional stocks that you can look at for setups. All of these showing relative strength, with some of the REITs like AMT looking very strong. bouncing off of the 50-day moving average, looking for a follow-through, with many of the REITs moving higher last week. Relative to interest rates dropping, that's one of the only places other than utilities you can find higher interest rates for those investors that are looking for fixed asset returns. Aside from dividend-paying stocks, many of the stocks showing up on the volume screen are showing some potential as well. Like BioCryst, some of you were talking about this in the trading room last week, BCRX, following through, relative strength line climbing, operating on a smaller loss going forward. Relative strength, IBD metrics not that great, but some of the names in the group also look good. So pay attention to some of these biotech names like CODX, Novavax, etc. that moved higher last week, Cara Pharma, while stocks like Citrix showed relative strength last week, going ex-dividend. Looking for a follow-through in Citrix Systems and a return back up to these highs. We bought a small position. We'll look for that to follow through as price action continues to build higher highs and higher lows, closing just off of the highs on Friday near 120, closing at 117.91. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com with your weekend video newsletter, March the 8th, 2020. Bottom line this week, we want to remain cautious. We want to be open to the idea that we could see an oversold bounce. We need to see indications of same. So maybe you wait for the alerts to come out after 10 o'clock or so. We never take anything really until after 10 o'clock. So we'll be waiting until the opening range is complete around 10:15 before taking any potential new positions. We're cautious again. We want to see that oversold bounce. We want to see institutions picking up shares. If they do, and we do get a bounce, remember we have hedges on. So basically it's a simple process if you're thinking about hedging. SQQQ, every time we pop to the highs of the day, we sell covered calls, look for a dip intraday to maybe buy them back, and just keep repeating the process each time, bringing your cost basis down while keeping your original position or adding to it like I have been over the last couple of weeks. Just in case there's any big dramatic drop down, we can hold our hedges and protect our position while selling premium over this heightened volatility period. I'll send out a watch list around 11:30 on the East Coast, 8:30 on the West Coast, so be sure to look for that in your inbox. Otherwise, keep your chin up. Things will improve eventually. And remember, we're looking for a short-term bounce. We're cautiously optimistic, but we're looking for confirmation before putting money to work. Take care. I hope this helps, and we'll talk to you soon.